Welcome to Season 3, Episode 2 of Office Hours with yours truly in partnership with the Loft. Today, we're going to talk about what happens after fintech innovation happens. Should be fintech disruption, right? And then, lo and behold, that disruption sometimes comes from places that you don't expect it. I'm going to talk about two things. Number one, Apple. I expect that Apple will be spoken in the same level and in the same breadth as large retail banks at some point in the future. I don't know if it's in 5 years or in 10 years. Apple will be a household name when it comes to financial services. Why? Because Apple has time, Apple is patient, and Apple is playing a long game in financial services. Very few people understand this, but let me take you through the history here. They started with like payments, right? They had to kind of process payments for their own ecosystem and their own e-commerce. So identification, authentication, and authorization of individuals and payments. And then they moved on to Apple Pay, which is like a framework for payments, not only for their own ecosystem, but for others. And then they moved to an Apple credit card, and then they moved to an Apple Card, debit card. And then recently they moved to Apple Savings. They moved to buy now, pay later. And they also have a way for small businesses to receive money once they have performed a service and they have invoiced their clients. Off of 1.2 billion of iPhones, that's their install base. That's absolutely amazing at scale, and I expect more financial products to be rolled out. All of those that I've mentioned are in the US, and now they're starting in Europe and other geographies. A powerful fintech payments and financial services business is Apple, definitely. That was the first fintech disruption, comes at you from places that you don't expect. The second is, I'm sure that you've read about what happened to Silicon Valley Bank, SVB. There was a run on the bank went under, and then was acquired, right? How can there be a run on the bank so fast within 1, 2, or 3 days maximum? Well, in part because of technology, right? Because of APIs and cloud computing. APIs and cloud computing allow for depositors to move their monies from one bank to another or from one bank to a money market fund extremely rapidly, right? APIs and cloud computing were foundational to like the first, second, and third waves of fintech innovation. Everyone used them and adopted them thinking that it would optimize their business. Lo and behold, these types of innovations applied to banking, applied to financial services, changed business models. And now, yesterday's business model for a bank was sticky deposits. Today's business model for a bank is we better think about our deposits and about servicing our customers, because else deposits will leave and we'll have a run on our bank. That's extremely powerful, and I expect, again, that financial services disruption will happen from places that you don't expect them to come from. That was it for today. I hope to see you with our third episode. Goodbye for now.